Welcome traders to the first video blog update of February. I hope you're well and you had a very strong finish to the trading month of January. So what I want to concentrate on in today's session is looking at being as proactive as possible as a trader. What I mean by that is preempting or predicting a move before the move has actually happened. Why do we want to do that? Why is it useful? Well, when you preempt something and then it does exactly as you expect, it gives you so much more confidence and so much more conviction to actually place a trade. Confidence and conviction as a trader, especially a new trader, is something that takes a bit of time to get, because we all know that as soon as we get into that trade, we have risk on the table, and that's when we get a little bit nervous. So the more confident we can be with our trade, the less likely we are to interfere with it, to play around with it, etc., and to follow our rules with utmost discipline. So some of the things that the process that I go through, as you'll have no doubt seen with some of the previous blogs, is I try and preempt the move before it happens, to try and give myself a storyboard as to what I want to see happening before it actually does that. Because if it does it, it cements my thinking and gives me that confidence. If it doesn't do it, then it obviously means that I can avoid the trade completely. So one pair that I want to concentrate on just to illustrate this point is the euro pound. Now I know we're in this trade short from a while ago. That's fine, we're going to park that to one side temporarily. What I want to look at is the potential for a buy position in a week, a couple of weeks time. I don't know how long it's going to take, but potentially, just looking at it hypothetically, what could happen and what I want to happen before I can confidently take this trade. So Euro GBP, we know, is in a very strong downwards channel. We can see that we've got resistance up at the top just here, and we have support down at the bottom. We have actually two layers of support, almost a channel within a channel. This level here, where we've had a reaction in November and just at the start of December, is quite an interesting level, and also this level just beneath it, this support level just beneath it, where we had some reactions in September and October. So now I have a zone where I want to see price drop down into. Once it drops down into this zone, that's going to be very, very interesting, because that's going to provide a layer of support where price could potentially bounce. What's very, very interesting as well, what I'm looking at, is I'm seeing that the price here is very close to breaking its previous low. So as the market comes down next week, it's very likely that it's going to break its previous low. Let's just zoom in there. So if it does that, we're going to be looking immediately then to see if we have divergence on our indicator. If the price creates a new low into this zone, and the stochastic doesn't do the same thing, we have divergence, which is an indication that the market wants to reverse strongly. So another tick in the box there for a potential reversal trade. So we're looking at this zone very, very carefully. It's also a Fibonacci extension from this swing low here to this swing high. And also, again, it would beautifully correspond with a 1.618 Fibonacci extension. So we have a very, very powerful zone now, almost like a trap that we want to see price fall into before we even consider a long opportunity. Now when price gets there, one of the key elements is the price action. We want to see that buyers are moving back into the market. So we want to see buyer bars. We want to see inside bars. We want to see low test bars. We want to see bullish outside bars that confirm that buyers are entering the market here. But can you see how powerful that is? If the market now does that and gets into that zone, I am going to take that trade with so much more confidence and so much more conviction. Now, is it going to do that? I don't know. Monday, Tuesday, the market may just shoot up and never get there. But that's fine as well, because it means that we don't take the trade. We only take the trade if it does as we expect and as we want, because it then gives us the clues and the confidence that the market is now ready to turn. And if it does, then we'll look to take advantage of that move. And if it does anything like it did in previous bounces, it looks like we're going to get a very nice return on our investment. So that's a really nice example of how you can be proactive. Now I'm spending time every weekend. I spend time analysing the charts and going through to see which asset classes are very, very interesting. Which ones can I actually work out what I expect them to do? And those are the ones that I will focus in on and have on my paper watch list that I will monitor during that week. And if they do as I expect, I will trade them. If they don't, I leave them be. And hopefully you've already started to see that with the trades that we've been blogging about, the likes of the FTSE, gold, Aussie dollar. We've preempted the moves before they've happened, and remember that's essential as a trader because we are speculators on direction. Unfortunately, we can't trade in hindsight. We can't go to the broker and go, well, it went down, so can you get me in at the price it was 3 days ago? Sadly, they're not going to be able to do that for us. We need to trade in the here and the now. In order to do that, we need to have confidence and we need to have technical reason for doing so. So it's really, really important that you do spend a little bit of time at the weekend when the markets are closed planning your week ahead, so you know what currency pairs, what asset classes you want to concentrate on for the week ahead. That's really, really important. And when you do that, you will find that when the market does as you expect, it's almost a spooky feeling because you're going, I preempted that. Why has it done that? Well, it's technical. Markets are driven by human beings and they're self-fulfilling prophecies. So trust your instincts, trust your technical skills, and go with it so long as they do as you expect. If they don't, you've got to be strong enough to say, no, I don't want to take this trade. So that's an example of predicting or preempting a market turn that hasn't happened yet. So hopefully that's illustrated the power of doing this little process each and every week to really give you the confidence and the conviction to take a trade when an asset class does exactly what you expect. And let's go back and have a look at some of the trades that we've already preempted, the ones that have done exactly as we expected. Well, we can start with Euro GBP. Let's go back. I remember we blogged about it in terms of we expected a turning point up here. So let's go back. I'm just going to take some data off so we can go back to that period in time. So we're a trader and we're looking at this market and we're doing a bit of analysis and we're going, actually, this level of resistance up here is looking very, very interesting indeed. So if it does get up there, I want to see a reaction. I want to see sellers moving into the market before I even consider that trade. We also noticed that price is putting in a bit of hidden divergence as well, where this high here is lower than this one here. But if you look at the two peaks, this one on the right is higher. So we've got some hidden divergence. Again, another reversal sign. But however, we can't take the trade yet because it hasn't got to the zone where we expect to turn. So we just have to sit on our hands and wait. It would have been on the watch list like it was. We identified it as a potential for a sell opportunity in a few bars time, a few days time. So let's just run through that. So we come back. Nope, nothing particularly there. It still hasn't got to resistance. Let's just zoom in a bit more for you so we can see this in a bit more detail. Okay, let's flick on. Come back the next day. Okay, it's got into this zone now, but is this bar giving us any clue that sellers are wanting to re-enter the market? Absolutely none at all. It's a huge buyer bar. Buyers are dominant. So my thought process is that it's going to break. However, we come back the next day, and this has happened. Okay, sellers have reacted sharply to that level. Now, everything has come together to say I should now be looking to enter this trade. Yes, it's a very large bar, but it's still a key reversal bar. So the trade has now done as I expected, gives me the confidence and gives me the conviction to take this trade short. And we obviously know the outcome of this trade. So very, very powerful stuff where we predicted before the market turned what we wanted to see happen. When it did that, we then put our hard-earned money on the trade and look to manage it as best as possible. And as we know, we're still in this trade. We've already banked the 1% on the first trade, and the second trade is a couple of percent up, and we're going to see how this trade goes. So that was the one example. Let's go and have a look at the FTSE, because I know that was a wonderful, wonderful example, both the buy and the sell opportunity. So let's have a quick look at the FTSE here. And let's just go back in time again. So remember, you can go back and you can have a look at the blogs that were posted. Let's go back in time to just here. Okay. So we had this significant support level, this trend line support, and price was on its way down to the support level. What was also very interesting is that price had created a new low, but this wasn't the case on the stochastic. We were creating a higher low, so we had the divergence there. So everything was looking interesting. It just hadn't got to our level yet. And for me, there was no key reversal bar. There was no price action there. So no trade. We just sit on our hands and we wait patiently. Now it comes into that zone, and it's pretty obvious that we get a reaction there. This huge bullish outside buyer bar is confirmation that the market has now reacted. The market has come all the way down to support. We've got that divergence, and now we've got the price action. That's backed up our thinking. It's confirmed what we wanted to see happen. Now we can take the trade with confidence and conviction. And again, you know how this fulfilled itself. It ran all the way up to the top where we took a sell opportunity. So let's just run that through. So the trade reacted, carried on going up strongly, which was wonderful. We hit our 1% on P1, and then we started to trail our stop on P2 to lock in further profits. And then the market ran into resistance. So now we're starting to think about the next trade. Okay, we're in a buy position, but if there is opportunities to sell, we will look to take advantage of that as well. So we noticed that there was a key level of resistance. Price was in this wedge. So if price gets to that resistance, and we see some other signs when it gets there, such as divergence, such as price action reversals, we will take the trade with added conviction. So we run it through, it's getting there. Nothing yet, hasn't quite got there. Let's carry on going. What we've noticed that we have definitely got some divergence, because we're seeing that this peak here, in comparison to that peak, it's going higher, but this to this is actually going slightly lower. So there's our divergence, a reversal indication, and we're just waiting patiently for price to slam its head. There we go. Interesting. A very significant high test bar, or pin bar if you're a candlestick trader, hitting its head into resistance just like it did on the previous attempt. Now it's looking interesting. Now it's backed up our thinking. We've preempted what we wanted to happen. It's done that. Now we're looking to take advantage of it. So we're looking and we're waiting. And another bar. So price action on its own, a single bar, is very powerful. If you get a multitude of bars, such as 2 consecutive high test bars or pin bars, it furthers your confidence. And then again, we know what happened here. The market fulfilled itself. It broke the lows. It triggered us in. It hit P1, 1% very quickly, and then really started to violently head back down to support, and locking in around about 4% to add to the 1% on P1. So a nice trade there to back up the long position. But the key factor here is that we are preempting the market turn before it happens. If it does as we expect, we take the trade with confidence. If it doesn't, and it does something completely the opposite, we leave the trade alone. And then Aussie dollar is the last one I want to use as an illustration. Again, on last week's video, we looked at the potential retest of support on the Aussie dollar. So we remember this was a lovely level of support. It finally got broken, and we said to ourselves we wanted to see the market retest this level of support as resistance. It did that. We got a high test bar, not the most convincing high test bar, I agree, but it's still a high test bar. Broke the low, triggered us in, hit our P1 target, but then we unfortunately got stopped on our P2 for break even, but still another 1%. But remember, the only reason we wanted to take this trade is because we said to ourselves, if it does come back up to resistance, which was former support, we'd look to enter the trade. That was before that market happened, because we looked at that as soon as this market broke lower. We said to ourselves, if it does pop back up into resistance and give us a sign, we will look to take advantage of the next move down. Only squeezed a small move out of it, but 1% is better than a losing trade. Actually, I do want to then finish on gold, because gold was probably one of the most predictive in its nature. This is a really nice one to finish on. So gold was beautiful because it gave us so many factors that gave us confidence that a buy position was going to be arriving very, very soon. So let's go back to that moment. So it was around about here that we started to blog about it and talk about it in the comments section of the website. So let's just go back to that time there. Okay, so it was in a nice downwards channel. There was also this support level from this reaction back in June, which was very significant, which also corresponded with this support level, the bottom of the channel. What was also very, very interesting was this ABCD pattern. So from this big, strong move down here, followed by this retracement, followed by this next big move down. It was roughly a similar amount of points or pips from A to B, then from C to D. So very, very similar. So we're expecting a turning point at this level here. However, it hadn't quite reached it. And what we didn't have is we didn't have any divergence to indicate a reversal. So we said to ourselves, we need to wait for another leg down. We need it to really give us that next leg down to hit this level of support and to also give us the divergence we need. So we waited patiently. And let's just zoom in so we can run this through bar by bar. So we go through and the market does start to slowly retrace, a very weak retracement. And we're thinking, okay, if it has another leg down, wonderful. If it hits this level of support, wonderful. If we get divergence, wonderful. We will take the trade. If it doesn't and carries on going back to the top of this range, then we're just going to sit out of the position. So we waited, and eventually it did that. It started to have another leg down. And then bang, came into this support level and reacted. We saw that with this type of bar, low test bar, strong bullish bar, where it hit this level of support. We got the divergence we wanted because this low is definitely lower than this previous low, but it's not done that here on the stochastic. So divergence is present, indicating a reversal. So everything has come together as we expected into a very, very powerful zone. So we are now much more confident to take the trade long because so many factors have come together. It's done as we expected. And again, we know what happened. It's been a bit of a slow and sluggish move to the top, but we hit our P1, 1%, and we're still in this trade on our P2 with our stop loss around about locking in another 0.75% because it's just underneath this level here, this big bullish bar. I've just tucked it technically under there just to protect a little bit more profit, because if it does break that low, I'd be concerned. So again, another great example, and this is exactly what I'll do with all of my trades, and what I drum into those that I mentor is just preempt a move, because it will give you so much more confidence if it happens. And do I preempt moves and they do the complete opposite? Absolutely, all the time. But more often than not, what that helps me do is avoid a trade that I really shouldn't be in anyway. Only the ones that do as I expect are the ones that I want to put my hard-earned cash on. So I really hope this video has helped and given you a little bit of food for thought. Really, a little bit of work goes a long way in trading, and it will be an hour or so of analysis at the weekend when the markets are closed, but it will be worth its weight in gold, because when the moves do as you expect, you will take those trades with confidence and conviction. And confidence and conviction are things that are really valuable to a trader, because it means you will stick with your position. It means that you'll risk manage. It means that you won't interfere and change your rules because of fear, because you've got that confidence which will override your fear. Okay, so I'll wrap up there. Plenty going on in the markets. Hope you're finding these really good opportunities and making some decent returns. January's been a great month. It's great to hear that many of you have been banking some nice profits. One thing I did blog about on Friday was something called protecting your profits. So if you haven't looked at that yet, go and have a look at the blog that I put on Friday. There was also another one on Monday, but the one on Friday was all about, now that we've come to the end of the month and we've done pretty well, what we don't want to do is get complacent, think that we are invincible. And trust me, I have been in this position where you then go into the following month and start to give back your profits. It's really important you do a little bit of analysis. Why did you do so well in January? What are the common characteristics of the good trades? What are the characteristics of the bad trades? Learn from the past to make you better in the future. It's really, really important. Again, another little bit of time, just doing a bit of reflection will work wonders for your future performance. So, have a great first week to February. Please keep your comments coming through. I'm always happy to hear from you, and I will speak to you very soon indeed. All the very best.